On. Okay, cool. So yeah, let me just talk about first of all, like why I was bearish on ES. I mean, again, beautiful EBP. Look at that prior candle. The market rallies up. And let me just go ahead and put on the hourly time frame so you could see the retracement back up into that. And again, whenever I post EBP setups, I'm typically, you guys already know how I trade them, right? Back up into the range. If you want, go down to the lower time frame. Beautiful 15-minute fair value gap on the news event and then sell off. I mean, textbook. Now, let me give you guys why I actually like this one specifically. It's the same thing that I talked about on NQ last night, why I liked NQ in terms of like the long position, and I'll kind of break that one down as well. Let me pull that one up. So on the hourly time frame, there was that beautiful EBP. The market had the consolidation on this next candle, and then we ripped higher into the closure of that fair value gap. It's because I like to see a secondary EBP. What does that mean? I want to see the market take out a liquidity pool, right? I want the market to have some sort of pullback into the range, right? This is reaction number one. I've talked about this on prior streams. Now, when I have that first reaction, I want to see a secondary reaction where the market fails to make a new low. What happens here? The market failed to make a new low off this fair value gap. Typically, when that happens, you can look to target some sort of liquidity pool above the marketplace, which it did so in here. So similarly on ES, same exact thing happened. We took out the Friday high. The market broke back below during London, I believe. Yep. And we took out the Asia range high. So that was the first reaction above the market. Now I'm going to go to the higher time frame as well, but just stick with me on the intraday for now. Now the market comes back. We have this bullish fair value gap. And what happens? The market has a consolidation. We try to rally up. We take out the high and then we form this EBP. And then the market essentially gives us an opportunity to sell short because now we have this second reaction. Now, some people are going to be like, hey, this fair value gap is open. Why do you like this EBP? Well, it was because number one, it's because when the market rallies and it takes out liquidity, this might not be tested back into. And not only that, we had a closure below the prior range. So if the market comes back up in here, the reality is the probabilities diminish in terms of bearishness because I'm anticipating the market to have a sell-off down into these lows. Now we took out Asia range low, so we'll see how this ends up closing. Um, Right? Like at the end of the day, it's like I always talk about in terms of trade management, you have two options. If you have a big objective, and let me just remove this. If you have a big objective, you could theoretically just allow the market to, you could kind of trail above like the prior swing points, right? So if this 15-minute closes at EBP, you can kind of give it a little bit of wiggle room, etc., depending on like the retracement if you enter, depending on how the entry was. For me, I do want to hold this because personally, I think we're going to head down here. Now, why is that? It's because of the daily time frame. So the daily, this is a setup I learned from Tom Dante. It's called inside day failure. So when you have an inside bar, so you have a daily candle, or it could be any time frame. When you have a candle like this that's inside the prior candle bar's range, right? We know that there's liquidity above market and below market. So when I saw that the market had this rejection on the intraday basis, typically what happens is if this is going, again, we don't know how this is going to close. But if this is going to be an inside day failure where people like to take a breakout on the prior bar high and then they look for a breakout of the inside day range, right? A lot of retail typically trades this pattern. And the way that Tom Dante trades it is very similar how I like to look for it, where you see a rally, the market fails to push and hold above the level, and then typically you could look to target either the opposing end of the range, but obviously with ICT concepts, I want to target this fair value gap. So we'll see how this ultimately plays out. Obviously, the daily candle is still printing. That's just the truth of the matter. So we don't really know how this will close. So it's kind of anticipatory in nature, right? 4 hour time frame though, it looks, especially if we can get a closure in the next hour and a half. Below this, I think it's just steamrolls lower, to be honest. So I'm personally holding it. And again, like good entries on these on that retracement here, minimal risk, and then the upside is just there. So this is one because I have a daily bias and I have the intraday confirming everything. I'm more than willing to hold this type of trade. So hopefully that makes sense. Let me go through any questions you guys may have now. Is it too late? Well, yeah, again on the EBP, yeah, now it would be too late because now it would be chasing. But on the retracement, like on that 15-minute retracement, even on the M5, it came back a little bit. This could have been another entry right there. Um, but yeah, even on the 5 minute, like this is pretty much where my entry was around. This 5 minute fair value gap before the news. I know people say don't trade the news, but like again, with the framework I just described, this to me was like A plus plus. So yeah, so I'm still holding this, honestly. I'm not going to even consider taking any partials until the rejection blocks around here. But I do think I like in my opinion, the way that indices move, this could really sell off. So we'll see how this ultimately plays out. But yeah. And if we have a closure below this 1 hour bar, right? Now this is the next lower high point, right? Where you would want to make sure to trail any stops above that candle bar high. Because if we go to the lower time frame, right, it's essentially going to be this pattern, right? Where now the way I always trail my stops is above swing points. So if we go down to the 15 minute, there's going to be a swing point that's going to form 4 minutes and 40 seconds until this 15-minute bar closes. But yeah. Yeah, so Sanchira, he says if price go up to fill fair value gap. I talked about it. That's exact. I knew people were going to bring this up. Again, we inverted this and we took out liquidity to the upside. So for me, I'm not worried about this. If it goes up here, in my opinion, that's not bearish. That's a very bullish sign that we just broke above all these swing points and all these resistance levels. If we break above here, it's no longer going to be bullish. I'm sorry, bearish in my opinion. 1 hour UCAD, yeah. So I'm gonna go through your guys' examples, but honestly, like this is my main. I mean, I'm already in this trade, but this is my main focus. And that's why I wanted to post this inside of the Omar's trades inside the Discord, because I already knew like this would probably set up before I got on stream. And even then, like on the news event, beautiful retracement into that 5 minute, 15-minute fair value gap. And now hopefully this gets that off. Now again, how you guys want to manage your trade is really up to you. But for me, I want to look for a big potential winner. Okay. So let me go to dollar CAD. Yeah, 1 hour. Uh, um, okay. Yeah, this one is let me see the 4 hour time frame. Yeah, it's not bad. The only it's like, you could probably trade it back down into this level here. Let me go back to ES. Yeah, I'll say this, man. It's definitely very, very logical. You could even, in my opinion, you could make it even like tighter of a stop loss by putting it below these bars. You see this candle bar here? You could actually just minimize it that much. And honestly, over time, you'll realize, because again, the way that this is the fair value gap, we have like consolidation before the push up. We have a big downrange candle, consolidation, big uprange candle. This, you could minimize your stop loss a little bit, in my opinion, and then your risk to reward will be even higher. And then once the market forms, like if this bar closes at EBP, now the way I would do it is I trail it typically a few pips below that swing point in here. Some people do it a little bit more aggressive, like they don't want this order block to fade, so they'll put it like right below the order block by a few pips. So like right here, that's really going to be dependent on you. So stop loss placement, in my opinion, is really good on this. The only thing is you could even minimize it a little bit more as well by putting it below these candle bar ranges. Yeah. All right. But yeah, I'm pretty much just focused on this one. Let me know if you guys have anything you want me to look at as well, or if you have any questions in general. Yeah, anytime I test them. How can you sync your charts? Yeah, let me show you. So you just go to settings and then haven't done it in a while. Let me see. Oh no, I think it's through here. Yeah, so you can go to this right here. You can go here and then you just sync and layout. You just click on the symbol and then yeah, it'll pretty much do that for you. Mohammed, Omar, aren't you interested in long and gold? I was, but honestly, I just like this ES because of like everything I talked about in terms of the daily time frame. I do think we were going to hit this fair value gap. So I'm in this. And again, usually this means that gold is going to be bullish. So like if NQ and ES, and mind you, those are beautiful 4-hour EBP as well in here. Beautiful, right? Swept the low, and then on the daily time frame, I talked about this yesterday on stream. We had the order block sitting there. So this is beautiful. And you can take this all the way up until this high right here, which is yesterday's high. It's just, yeah, I'm just not going to be in two trades at the same time, but gold also looks good. Like if I wasn't in ES, I would also be looking at gold. But again, if indices drop, typically gold is going to go up, right? So it's like I don't want to be in like I don't want to be overexposed in two different positions. That if this goes against me, then gold might go against me as well. But gold does look good though, because I know, yeah, gold definitely looks good. But yeah, now it's kind of just like a waiting game, to be honest. And I know like the reason why a lot of people like to scalp, and I'll be honest, it's because like for these hourly bars to close, it's like a whole 1 hour. For you to wait for this 4-hour expansion, like let's say we get the next 4-hour bar pushed up maybe, and then we have that next move lower to clear out the liquidity here. Like it's gonna take some time. That's why like on the streams, if you guys have any questions or want me to look at something, feel free because we have time. But the reality is like, to wait for like this 4-hour bar to form and then the next potentially, if I'm correct on the bias, right? And this hits TP, like it might do it in like the next 4-hour bar. So it might be an hour and a half, 2 hours, 3 hours, etc. This is how I don't like get out of trades too early sometimes. I mean, don't get me wrong, I do get out of trades early sometimes. But when I'm trying to hold a position, I remind myself like, hey, this might take a few hours, right? And in this case right now, right, I have the app on my phone. I would just either go to the gym right now if I wasn't on stream, or I would do yeah, or I'll go for a walk or something like that. Because again, nothing's gonna change. I could just check the chart every 1 hour bar, adjust my stop losses accordingly, and then kind of go on about my day without like looking at like the 1 minute or like I'm like, oh my God, what if this is like a order block here and then like what if it rips? You know what I mean? I don't want to do that to myself. So small little things like that make a big difference. Euro USD looking like a buy signal. To be honest, with Euro, yeah, beautiful fair value gap. I'm not gonna lie, man. This one was like really nice overnight, but this happened like right at night. You get that first reaction. We also have that fair value gap down here. And then you get the confirmation of the 4-hour EBP right there, man. Down to look for that lower low. So high, low, potential lower high with the EBP candle as a confirmation. Beautiful downside objective. Like this was so nice, man. But this happened at like 1 o'clock at night. Okay, guys, give me 1 second. Hold on 1 sec. 'em. But oh yeah, in terms of buy signal, I'm not sure to be honest, because like I don't like trading. Let me just remove this. 15-minute fair value gap look good for re-enter on ES. Let's go to ES. I don't see a 15-minute fair value gap. There's a 15-minute EBP though. This 15-minute EBP was very like that could have been a dynamic risk approach. Okay, yes, crossing, beautiful. And again, now it's just a waiting game. Now it's just a waiting. Now again, if you guys like it, depending on how, like I don't know if anyone's in this trade, like you could manage it however you want. I'm just telling you guys what I'm doing. And then who knows? Like the thing is, what if this doesn't go here and then just rips later? That can happen too. But the way that the market structure is looking, I don't want to like overthink it, right? Like I'm going to put an alert here, and this is really going to be where I'm going to consider taking some money off the table. It just comes down to the reality of like you want to make sure that like when you're in a winning trade, especially with the logical bias, right? You want to try to run the trade to the objective as close as possible. Is US 500? Yeah. So yeah, yeah. So mode S is US 500 and S&P 500 E-mini same? Yes, sir. It is exact same thing. I just use the ES contract just because it's like it's gonna be the same on every futures chart. If I go to US 500 on different charts, it's all gonna be different. So I get the common question is if this is like let's say 6,242 is the current price on the CFD charts, so the US 500, it might be 6,000. 342, right? So there's a 100 point difference, but all you gotta do is like if my stop loss is let's just say 6242, and I know that the stop loss on the CFD side would be this price point or TP, whatever it is, like I'm just gonna adjust it accordingly. I'm telling you, man, if I just quit Mondays, if I quit Mondays entirely, my trading would be, I'd probably be making a lot more money from trading. It's just something about Mondays, and this is why I tell you guys like you have to journal like your trades and stuff like that. Because I know on Mondays, it's harder for me to pick a bias or direction during like around midweek, around like Tuesday, Wednesday, Thursday is really like prime time where it's like it's a lot easier for me to like see what's going on in the marketplace and then take trades accordingly. Okay, so Tanja asks, Omar, if you point out potential trades on weekly, I'm able to find my entries with your overall criteria to on the trade floor. Now, her problem is I find it hard to find my own trades from scratch. How can work towards understanding the higher time frame better and find your own trades? To be honest, honestly, that's a really good question. I'm really glad that you asked that, Tanja, because that's really, and this is why I don't like the whole idea of spoon feeding people. Number one, it's like lazy. I took the time to learn and be able to find the trades myself, you know, and I want to show people like in real time, like, hey, like you guys can do the same thing. It's not difficult when you have experience and when you put the time and work in, right? Like I have students who've done really, really well, and and it just comes down to this, from their experience and from my experience. In order to find your own trades, you have to you have to journal. You have to journal. So like if you understand, okay, like these are the criteria that Omar's typically looking for, right? That's you can use this very similar criteria. So you can find like, hey, Omar likes to take trades around liquidity pools, right? He trades a reversal profile or continuation profile. And then what you can do, because I had the same issue when I joined ICT's mentorship back in 2018, 2019. I was almost dependent on his analysis. Like if he didn't analyze EU or GU, which was is exactly what he was trading at the time. He used to like, I used to be like, damn, like I used to have no confidence in my trades. I used to be like, oh my God, like, you know what I mean? I would just hesitate a lot. So, in my opinion, you kind of have to get to a point where if you're watching the same asset classes as I am, I'm not saying not to like look at the analysis, but because obviously, like, you want to get the insight on why I'm looking for certain things. But what you can do is just if you're watching the same asset classes, kind of have your bias to start off the week before you watch the commentaries, right? And then just, kind of analyze what you're looking for and then kind of do that breakdown analysis. Like the thing is, and if you, I don't know if you watched so I uploaded the webinar yesterday. It's on WAP about, I'm sorry, the one on Monday on how to create a trade plan. So I would suggest, I don't know if you watched that one, Tanja, but also, you could go through that. That is a whole sequence on how you can have a checklist of items, of questions, of what you want to watch for, and yeah, you can go from there. So Daniel, thank you for sharing everything you share. I've learned to take walks and be patient. Man, it has helped the psychological part a lot. Yeah, man, I try to give you guys like honest, like practical things, right? Everyone tells you be patient, but like the way I have learned to be patient is I just realized like, okay, if this 4 hour expansion, right? Right now this looks beautiful. Like, why would I want to exit this trade? Because maybe there's a little bit of a pullback here, right? This is just not me being logical. If I'm looking at my PN, like right now, I don't even know how much money I'm up because I have the trade on my phone and I'm not looking at it. I don't want to mess up a potential for a really big move when there's a real likelihood. I mean, look at the daily candle, how it's printing right now, right? Inside day failure. Shout out to Tom Dante. Potential daily EBP, fair value gap. Like there is so much confluence. I don't want to mess this trade up. And if I know that this is a potential change in state of price, right? An hour and 20 minutes until this candle closes. We took out liquidity. We have a breaker. We have a liquidity downside. Why in the world would I want to exit this trade early? Right? And if I know that there's an hour and 20 minutes left in this candle, and then potentially maybe we don't see the expansion until the next candle, then guess what? Why do I want to? I don't want to mess this up. So I have to. So number one, I'm putting it in my mind that hey, this might take a little bit of time. Number two, if I'm walking away from the charts, it's fine. It makes it so much easier. Like it's practical thinking. And that's why I really try to give you guys like that insight. I know some people just want signals and stuff like that. Um, and listen, man, I get it. I was there as well. Right? But at the end of the day, like being able to fend for yourself is the number one goal. And being able to give you guys practical advice of things that have helped me is my mission statement, is to give you guys the most, not just obviously just about the trade setups, but also like the reasoning behind it, how to stay patient. These are I don't think people realize that is the edge in trading. Like, yeah, EBPs are nice, but bro, it's not difficult to identify EBPs, right? But understanding context, understanding how to manage your trade, understanding, okay, which EBP should I hold? These are the ones, how again, all these things, man, like these X factors are the edge in trading. Atesim Omar, do you give importance to big three news? Yeah, so I avoid, yeah, you're correct. So I avoid FOMC, NFP, and CPI. So for me, like there was like I think there was some sort of news event at 8:15. I didn't really care about that, to be honest. Well, we just missed a trade on gold. Let me see gold. Yeah, gold, honestly, like gold was a really good play, man. I mean, there was a nice little 15-minute retest here. And the hourly EBP potentially as well, closing in 20 minutes. See, like sometimes you can front run this. It's a little bit more risky because you don't know how this candle will close. But like if you're bullish on an asset and you start to see this forming and there's like, 15 minutes left in the candle closure, you can front run this. And what do I mean by front run? Like you can kind of just enter if it's looking at the like for example, if I saw this like forming and I was like bullish and it formed at this, you can kind of front run this on the 15 minute, on the 5 minute, etc. But again, you do run the risk that this might not close the way it does. That happened to us, remember, on NQ a couple of weeks ago, I think, or maybe last week. Beautiful. Yes. You know what I mean? That's what I'm saying. There's no reason. Now, again, if it's a rejection blocks, we might see a little bit of a pullback, especially at market open. This is where I would say you want to manage your trade accordingly. Meaning, if you want to take some partials, which honestly I'm probably going to do because this is a very big expansion. And again, if you see the next 4 hour bar, if I don't want to deal with the retracement back into this order block. So these are what goes through my mind when I'm doing this. So I'm going to take one position off here. And then the other position is going to be pretty much at break even. I'm just adjusting my orders on my phone. But yeah, guys, I mean, I'm telling you, man, like this is why I tell you guys to be patient. Like I rushed it on Monday, to be honest, with that EU short. It was a good trade, but like I wish I wasn't in that meeting because I ended up taking that loss, even though I saw the market start to chop and I saw the M15 bullish EBP on that one. But again, man, beautiful, beautiful, beautiful play. And that's why I try to tell you guys, man, like you just wait for these really good opportunities, they will come. But I'm definitely gonna hold a position. I'm gonna extend the TP down to like around here somewhere, on the remaining position. Early stream. Yeah, yeah, Fat. So if I see a setup a little bit earlier than 8:30, I'll start the Zoom right away because I want to give the explanation before it happens because it just hits different, right? Like you don't want to see me talk about something after the fact. But I mean, beautiful. I mean, beautiful, man. This GU, like these are the types of plays. It takes a while to set up, and I know. Like, thing is this. Realistically, I know a lot of people, maybe not some of you guys who attend the streams on a consistent basis. And even if this is you, that's no problem. But the truth of the matter is, like, people want action. People want, oh my God, I want to trade. I want to trade. And you guys have seen me. If you followed me on my Telegram, my public Telegram or whatever, like you see, I don't really post that many trade setups. And it's because I want to wait for like these big moves in the marketplace. I don't want to trade small moves. I mean, this is just a phenomenal, phenomenal fade right here. Let me just update the Discord and tell them like what essentially taking PTP. Yeah, guys, my bad. Let me just do this. It's hard to manage everything all at once. Clone. Yeah, David, I was saying with just GC, it does look good for potential buys as well. In 14 minutes, 15 seconds is going to close. Um, but yeah. Du- du- du. Now, ideally, in like a situation like this, you go down to the 15 minutes. So now the stop loss, this is such a big range, but the stop loss could be pretty much around here. You can put above this 15-minute high. On the 5 minute, yeah. Because you don't want to see too much of a big retracement. Now again, this is what I mean. Like sometimes I'll take partials because look, realistically, this is such a big 4 hour bar. If the next 4 hour bar opens, right, it's still an hour and a half. But like sometimes what might happen is the market might retrace back up into here, right, into that order block. So sometimes we might get that retest. That's going to be above here. Do I want to deal with this type of pullback after being up this much money? No. That's why I always believe in taking some off the table when you get that expansion. Because I understand that if this happens, like what's happening now, and we have a retest of this order block, I don't want to deal with that potential. Even though I still think that everything's fine, there's nothing wrong. Like us retesting this would be perfectly fine from the 4 hour perspective. Yeah. Oh yeah, so Tanja, yeah, so the webinar is going to be inside the webinar section. It's not in the live stream recording. I'll take a screenshot of that after the live session and I'll post it so you guys know where to find the webinars. The webinars are posted in the different module. Gio just melting like he will die today. Gio. Yeah, man. This was crazy. This was insane. And this is why, what do I always tell you guys, man? When the market takes out a massive liquidity pool, I am typically not trying to buy the dip because sometimes this happens. Now, to be honest, I don't know if there was going to be a potential entry here. It would have been unless you took this fair value gap on the news, but yeah. Yeah, this is like how much of a move? Damn, like on the day, it's almost like 200 pips. No, 160. Pretty insane move. Someone just banking dollars? Yeah, so Andres asked which news do I avoid? FOMC, NFP, CPI. That's it. Um, do you have a minimum risk reward to move your stop loss to break even? No. So like again, I base it off of structure. So if like again, if the market takes out a swing high and then breaks back below, my initial stop loss is there, right? This was the hourly EBP. So any retracement, I know this is my line in the sand. And the thing is that some people will be like, "Oh, well, how come you're not saying exactly where you enter?" Like at the end of the day, guys, I'm trying to tell you, like, if that for me to post the exact number, by the time I post it, like the trade might just be gone. That's why I just post the EBP, and you know the way that we trade these, right? Back into the range around 25-50%. If you want to go down to one time frame lower and see a fair value gap on the 5 minute, 15, right? Boom. And you know that the line in the sand is going to be above the 1 hour bar. Now, how do I adjust the stop loss? Like if I start to see like, structure in my favor, right? Like we see a swing high here, right? Maybe I got in around somewhere here. Now the stop loss will go pretty much above the swing point because, the market really should not trade back above here, and we should look for the market to trade below these lows. So it's logical. Now, again, that maybe the market now just kind of like has a pullback, and then maybe we see another 15-minute bar like this, right? Then my stop loss would then be trailed above this high. But again, these are only for partials, right? I always I don't hold the full position because I don't want to deal with the big pullback. This is a really big move in the marketplace. And I think we could get an even bigger move at the market open at 9:30. So I am not gonna mess up the trade by making my stop loss too tight. Now, if we close, like let's say we took out this liquidity pool, right? Now you can close either all the position or you can have an aggressive approach on your stop loss. Because now when market takes out liquidity, there's a chance we might pull back. Like let's just say at the market open, this 4 hour bar takes out these lows. In my opinion, if this same 4 hour bar takes out these lows, I'm taking out the full position. Why? Because there's a chance that we might have a pullback back into the range. And even if it continues lower, I do not want to hold through this. That's my personality type. I don't like pullbacks. I'm pretty sure no one likes pullbacks. But yeah. David, so what was your analysis London session? So I talked about it early on, so let me go back over that. So NQ. I mean, man, I tell you guys, these are the ones that I absolutely love. So on the hourly time frame, right? Number one, we took out this liquidity pool going into Asia session. Now, when we took out this liquidity pool, I knew that okay, this is one reaction. Now, typically what happens is the market has a lower high potential, and then the market failed to make a lower high right here and form this hourly EBP. Now, when I posted it, I was watching it in real time and it formed this 15-minute balance price range. So let me just identify that order block. So again, and why do I tell you guys I want to trade the market from one level to the next? Because look what happened. If I was being greedy with the target and I wanted to target something up here, even though we have a clear bearish order block, right? I mean, you could hold, but like you have to be mindful when you get like something like this, change in state of price. This big drop creates a bearish order block. This is not a bullish sign any longer, right? Now, when I saw this on the, I saw this order block being created during after the Asia session, and to me, we formed this BPR. So I'm like, all right, this is probably going to just rip higher into that 15-minute area. I was looking for a little bit higher up around this 15-minute fair value gap, which just missed short of it. But these are yeah, but this is just again liquidity being swept, impulse one. Failure to make a new low, and this was around during Asia session kill zone, right? Which I talk about is these times kind of mess me up 21. So this is 1 o'clock, 12 o'clock, 11 o'clock. Yeah. So when I saw this, like it was a little bit past the sessions kill zone to be honest. But I still liked it because I knew that we had this objective and it was like more of a scalp play. Because when you go down to the 15-minute time frame, this was kind of like my entry right here. And I saw like this little bit of a retracement. I saw this 15-minute EBP. I started to see this push up above, and then we started to create a 15-minute order block. It was just a very tight entry, tight stop loss, quick scalp, back up into the range. Because everything I do is I want to see liquidity being taken, and then I want to see clear upside objectives. In this example, there was a clear upside objective to this order block after being created here. The range is tight, I would admit. That's why I went down to the 15 minutes to look for an entry. Yeah. So I will say this, Stefan, like is but the problem with NQ is if in terms of like we're playing a reversal, there's so much resistance overhead. So if you go down to the 4 hour time frame, there's now this bearish order block, right? That swept liquidity. So a reversal would be just a little bit more high risk, in my opinion, is the way I kind of view it. Like even if, let's say, when you turn off the, because the thing is, Asia session was taken out, I believe, just by a little bit. Like you see these wicks, I'm pretty sure they took out Asia range high, and we have a drop lower. So trying to fade this move back into the range is a little bit more quote unquote risky, just because there's a 4 hour order block. We took out liquidity, and we're continuing bearish structure on the 1 hour. Now again, could there be like a relief move? Yeah, but you're playing it back into a resistance. Thank you guys. Why is there around 10-minute difference in the candle closure and trading view between Forex market and the futures market, like the S&P and ES? I don't know. Maybe it has something to do with the rollover period. I'm not sure, to be honest. That's a good question. 10-minute different candles and candle closures. Let's see. It should be the same. Let me see the CFD chart. That's yonforex.com. No, so yeah, it closes at 6 minutes for this one, S&P 500, and then ES 6 minutes as well. So yeah, I think they should close around the same time. Oh yeah, yeah, yeah. So yeah, thank you. 3_LA. Yeah. So in order to if you're trading ES, I have the subscription to the futures data because sometimes this will be delayed if you don't purchase that. It's like I forgot how much it is. I think it's like $5 a month or something like that. It's like very, very little. Um, but yeah. So yeah, you have to buy real-time market data for futures, or else you might have a delayed feed. Yes, the fund. Okay, yeah, yeah, 100%. Yeah, exactly. Some sort of confirmation. So our future journey and make us mega rich. Man, I'll be honest, bro. It's like if futures, if future, the problem with futures accounts is it does not go with my style. So like the consistency rule, and I've tried. I'm just not a big fan of like the consistency rule, man, because like you guys know, you guys see how I trade. Like I like to capitalize on one or two moves throughout the week, and they might be oversized returns. Like I might take a couple scalps here and there, 1R, whatever, like throughout the week. But like these types of plays that I look for these big picture time frames, like this could be like majority of the profit for the next 2 days or 3 days. You know what I mean? The problem with the consistency rule is like if I make, let's just say $1,000 today, right? And then every other day, maybe like $200, maybe like, scratch one day, maybe minus 150, right? The problem is, like, even though like you're pretty positive overall, what happens with the consistency rules, if your biggest day is 30%, or depending on the firm, 30% of the overall gain, then you have to keep trading until your payout, which makes no sense to me because it's like, well, me having a big trading day does not make me a gambler. It just means that there was a good opportunity this day. Yeah, exactly, JJ. So JJ says consistency rule is to force traders to take the same risk reward trades every time. I agree, but the problem is like what if like you get a really good entry one day and you find a daily bias and then you have a really good opportunity and it's like all the big traders that I watch from S&B Capital, they have outsized returns where like one trade might make up the bulk of their P&L. And it's so funny because like they would even say like sometimes throughout the whole year, almost 80% of the P&L for the whole year happens in like a month for some of the top traders because when the opportunities are there, they just like put on more size. I gotta charge my phone. Um, Stefan, how do you get conviction? Actually, guys, give me 1 second. I'm just gonna put my phone in charger. 1 second. All right, back. So Stefan asked, how do you get conviction to enter trades on NQ earlier during the day? I have entered hourly EBPs between 4 a.m. to 7 a.m. and price ends up stopping me out and going in my direction. So I usually look for EBPs after 8 a.m. Good question. So it just depends on the framework. So when I saw this, obviously this was a 7 o'clock candle, closes, and then going into 8 o'clock. Now it really is the framework. Like I know it's like kind of an ambiguous answer. But if I see something like this, where I see that the market took out these highs, and not only that, NQ is relatively weak. So there was a little bit of SMT in here as well. And again, I realized like, okay, if we actually fade and we're taking out the liquidity below the marketplace, I don't want to miss the trade, especially because we had the EBP and we closed below. And we already, this is, and mind you, this is the second run on stops. So when I talk about one impulse and two impulse, realistically, it's really I'm looking for one run on stops right here. That's number one. We took out this prior day highs, we took out Monday range highs, and then we rejected. Right at this exact moment, do you want to kind of like take this trade? It's kind of like okay, we're at this bullish fair value gap. So like even if you're looking for sells, you want to either wait for a retracement back up into here, right? And then a second run on stops. So this is what I mean by like second impulse. It's really just a second run on stops. We get the second run on stops to open up this hourly candle. We took out liquidity and then we drop lower. So for me, the timing is a little bit irrelevant because for this example, only because we already had one run on stops, we had the second run on stops. And when I have the second run on stops and the market already broke back below and we inverted this fair value gap, I'm like, all right, order flow on the current leg looks bearish. And then I'm looking for that. So that's typically, it really just comes down to the overall context of the marketplace, to be honest. Now, again, you can have very strict rules, and like maybe over time you realize, like, you know what, irregardless, maybe you have like one day where like you did well on the trade, but then you're losing three other trades that happen. And over the course of maybe like 20 trades, you realize no matter what, you're still losing money on these types of plays more than you're making. Then you should just say, you know what, it doesn't matter. I just won't take those trades. It's really up to you. That's why I talk about Mondays all the time. For me, I don't trade that well on Mondays. Even though some Mondays I make some money, it's like over the long run, Mondays are just my kryptonite. And it's because I don't get to see where's liquidity being taken. Now, sometimes Mondays I can trade well is if Friday takes out liquidity pool, right? And then like Monday, we go into Monday, and then Monday has that like something that's very similar, then Mondays I'll trade well, but only if it sets up from the weekend. Fat, do you have minimum risk to reward to move your stop loss to break even? Yes, I talked about this. It's really just based off of structure. The problem is with like if you're up 3R and you're like, okay, well, should I adjust my stop loss to break even? I mean, at that point, I'm pretty sure if you're up 3R in a trade, you probably should either take some profits off the table or you should definitely be at break even. Like you should not be up 3R and ever take a loss, in my opinion. That makes no sense. But I'm pretty sure, even if you're up 3R in a trade, I'm pretty sure market structure, if you trail your stop loss based off market structure, you should be at break even at that point. Canal's like, I don't know why future trading gives me so much excitement. I'll be honest, man. If unless you have a system like you're a scalper or like you have a system that can go for base hits, then futures firms are fine. But for me, like again, I have outsized returns. Like I'll have a day that I make the majority of the money for the week, right? And out of the whole month, maybe have like, a couple of days out the whole month where majority of the P&L come from. And I used to think that was a bad thing. Like, damn, that means I'm not consistent. But then I listened to people like Brando, who's an options trader on Riz's podcast. Steven Duck's another stocks trader as well. Um, and they all say that they all have outsized returns. Like, and I've talked about this on stream before, where Brando talks about, and mind you, he's made like $10 million plus in his options trading career. And he says like people think consistency is $200 today, another $200, break even, minus like 50, plus 200. Like people think this is consistency. And again, this is consistency, right? But he was like, the truth of the matter is like most traders are gonna look like this, maybe plus 1,000 today, minus 200, break even, plus 400, right? And then maybe like a break even, right? He's like, this is more realistic than this. And again, that means that one day was an outsized return, relatively speaking, to the other trading days. But that's fine because again, not every single trading day is going to provide you with the same amount of opportunities. There's a potential entry in Euro UD. I've talked about this before. It's just so much chop, man. Like I get what you're seeing, like this EBP, but then also we took out this high. I don't like trading inside of this type of consolidation. It's just super, super messy. My video of how to navigate now opening a laptop. Try to open up like on incognito on the browser and see if that works. Smart money engulfing candles. Let me see. You're right, Stefan. So because 930 has a huge manipulation move, typically you're right. That's what I mean. So if you're not comfortable like with those types of like trades that you want to wait, you can. The problem is sometimes what happens, and maybe this will be an example of it. So market open is in 26 minutes. Sometimes what happen is like you might get the stop hunt a little bit earlier. And then what I would do is this is something I would do with a different type of trying to remember what do I do this with? Oh yeah, Asia session. So Asia session, if the market does not move in my favor as we go into midnight, I automatically close the trade. If I'm around in profit or if I'm around break even, I close the trade. What you could do is you could do something very similar, or you could look to do something similar where it's like, okay, you know what? Maybe if you see a setup a little bit before market open, I'm going to take that setup. And if it's not in my favor, if I'm not in profit, then I'm not going by the time it's close to 9:30, then you could just cut the trade. Because sometimes what happens in 9:30 is like it might be a continuation move down after the market already swept liquidity in the prior, like, before the open. So that's something to be mindful of. So that is something that you could look into. Yeah, guys. So when you go to the indicators, it should be in invite only and it should be named this smart money engulfing. It should be, I know EBP, but um, I don't know how I can't actually I might be able to change it on the back end, but this is what it's named. So if you see smart money engulfing candle, that's it. Bullish 4 hour EBP on dollar Swiss. Yeah, but like I like to see more ones that are like a little bit more energetic, to be honest. Now again, this doesn't mean this won't work, but it's just because we still have this daily fair value gap, it's also pretty counter trend. I really don't like the 15 minute. The way that it closes is kind of weird. Yeah, I'm not a big fan of that one because on the 15 minutes, it's actually at this fair value gap. Um, and you guys said gold. Where's gold? This one, if you were gonna use this EBP, the only thing it would be pretty much on the retracement. Like if you, again, what you could do, you could always go back down into like see if there's any fair value gap. Then that's going to be the one that you ideally want to like kind of trade back within. One thing I do want to, yeah, this one's actually not that bad though. Just don't like this kind of rejection right here around the 4 hour order block. Yeah. Again, I'm pretty, again, the way you guys already see, like I'm pretty picky when it comes to my trades. Like I don't like when I see like a fair value gap like here, order block, and then there's the Asia range high. Because then it's like, is this going to be, and we took out the golden hour range high as well. That's the only like con that I see of this. Now, again, if it works out, perfectly fine. But I like to see this, like if there's a resistance above hand and like there's no liquidity being swept. But sometimes you're gonna have this, and then the market just rips higher and doesn't really matter. But yeah, just get again. When I give you guys these things, I'm not telling you like listen to me. I'm just giving you my feedback, and I try to be as honest as possible. I don't want to just be like a yes man and be like, yeah, like this one's perfect. Yeah, this one's perfect. Justin, would you take gold buys? No, just because I'm in ES already, honestly, and I don't want to like get into another trade. And again, the reasoning I just talked about as well. Put this back to the 1 hour. Yeah, same reasoning I gave. Again, it could work out like 100. Like I'm not like it's because if ES and NQ fade off the open, we probably have a push up on gold. But yeah, Eh, Kuno, I'll be honest, I tried futures this year twice and failed both times because of trailing stop loss. Yeah, I don't like to. Yeah, and that's another thing too, man. Trailing stop. But like Stefan says, you could try stop step. Top step. I don't believe they have. Do they have trailing stops? I'm not even sure. Okay, yeah, Stefan. Okay, yeah. So Stefan says 50% on top step, which is fine. Yeah. 50% is, I think 50% is fair, but 30% is a little bit crazy, to be honest. 30% is a little bit much. And it's the thing is, I would understand if the consistency rule was like, um, your biggest trading day cannot be 30% of your overall gains, right? Not the profit on your account. Because the way that it works is this, which makes no sense to me. If let's just say I have 3 trading days, right? And like and it's based off of this cannot be 30% of the overall days that I win and make money, right? So let's say this day I made 500 bucks and maybe this day I made 300, right? So total profits on winning days is 1800 bucks. So if this is 30% of that and you have to keep trading for a payout, then I could understand that and in my opinion that makes sense, right? But what doesn't make sense is like, let's say you lose 500 bucks on a different day and maybe you took like a bad loss and you lost 800 bucks. So you're down 1800 minus 1300. Okay, I'm just confusing myself. Okay, let's just say you have okay, let's say you have these profitable trading days, but the overall P&L, maybe you lost 500 bucks on two separate days, right? And then your total profit is $800. Now, they say that this cannot be 30% of the overall gain. This makes no sense to me. It should be, if anything, it should be on the winning days. Like, hey, this date is pretty much similar to this. You know what I mean? Obviously, it's more, but like this is reasonable. But like, so now you have a consistency rule that includes all the P&L. And like you're gonna go through a trading loss. That's why it doesn't make any sense to me why it's like originally I used to think consistency rule was like this. And I'm like, yeah, that's not too bad. Then when I found out how it worked, I'm like, this actually makes no sense. Yeah, so Emilian, new indicators online on WAP. Yeah, it's on WAP. I have it's inside of so inside the Discord, I have a section on how to access the EBP indicator, and I talk about how to implement it and stuff like that as well. Yeah, so a lot of you guys in terms of gold. Yeah, I guess give my reasoning. Just because we're above Asia high and then the 4 hour bearish order block makes me a little bit uneasy, to be honest. See, like when I talk to you guys about like I want to trade the market from one level to the next, like this 4 hour EBP would have been much better to try to get in before this push up. Once the market moves up into the level, this can continue higher for sure. But now there's a risk that there might be a reversal in play as well. But look, when we formed this, we took out liquidity and we still have this bearish order block that we could target and the Asia range high to target. Now that we hit that and then we form another buy setup, it just becomes more risky. Like if you had gotten in here around that 4 hour EBP on this fair value gap and then took it to the move up, this would have been a much better trade in my opinion. Even though we did take out the Asia range high in this example, but we still had the 4 hour order block. Well, did we? Let's see. When did we hit that? Oh, never mind. Same thing actually. Yeah, because we hit that and then we had a rejection. So now we're kind of rejecting it twice. Yeah, Ariba. I need to start doing that. 'Cause, like, sometimes I look at by the end of the session, I have all these things on my watch list. H4 EBP on EJ. You know what? I'm gonna listen to here JPY. Okay, so the EBP is good, but let's see the daily time frame. Daily time frame is a little bit choppy, honestly. Like to me, what's chop, right? Because people ask me what's chop. Like if I see too many wicks and too many down close candle, up close candle, then down close candle, then down, you know what I mean? Like these big surges in price, I do not like, especially when it's a bunch of wicks. Yeah, it's just yeah, just not my cup of tea in terms of like a framework. The EBP though looks good because we took out multiple liquidity pools and we're pretty much at the range high. I guess maybe like, but even then it hit this fair value gap. Yeah, just not the biggest fan of this one. And by the way, guys, I know I keep repeating this, but just because I'm not a fan of something doesn't mean you guys can't just take those trades anyways. And then kind of like say, hey, because again, this could work out. I don't know. No matter how good the trade setup looks, or no matter how much I think, okay, you know what, maybe this is not ideal, the trade could still play out. But I have very specific criteria. I want to have clear DOLs when I'm looking for an EBP. So let me try to find an example of this. Well, I guess one example was this, right? Where I'm looking for these lows because it's combined with this daily fair value gap. So that's what I mean. Like, okay, I have an EBP, but I have a higher time frame daily fair value gap that I maybe can hit, and there's a big enough range for me to get an entry and then to play it down here. Yeah, so what he was saying backside move on gold on the 5 minute. Yeah, theoretically you could. Like if you want to see like maybe like some sort of like confirmation on the M5, that's something definitely you could do in terms of waiting for a potential confirmation. But the range is so tight that it's like if you get a confirmation like up here and you enter a stop loss, you still could play that, but the range is just very tight. But again, I think if at the market open, if this sells off, then gold should typically rally when NQ and ES fade off. Give me 1 second, guys. I'm just gonna go grab my phone real quick from the charger. Yeah, so Eduardo says, I don't like those platforms that if you withdraw your entire profit. Um, You basically can't have any drawdown. The trailing drawdown is what I'm referring to. It makes you have to always keep money with them to continue trading. Yeah, man, that's another reason why I don't like the trailing drawdown because if you withdraw, it it affects your the trailing drawdown, which to me again doesn't make any sense. That's why I like again, if you guys I know if you're from the States, like you're in the US, there's still enough accounts that you can get to make good money. Like you can get $1 million in funding with prop firm accounts, even if you're in the US. I talk about it all the time. Funding Pips, Alpha Capital, Think Capital as well. Those three alone, I think Think Cap I know you can get minimum 400K with them. Alpha has 400K, has 800K, and Funding Pip has 300K. That alone you can get $1.1 million. And then if you want to even get even more capital, then you could look into the futures firms. I'm just not a big fan of like futures firms, man. I try to be, and I look at, but every time I look at the rules, I just know that it doesn't make any sense. For my style, by the way, right? The way that I trade. And mind you, even with futures firms, you can't even hold the trades to the next day. You have to close everything on rollover. How is it a 4-hour EBP if it didn't take out the open? Let me go back to dollar Swiss. Where's dollar Swiss? Let me go to the 4-hour. No, so technically it's classified because the opening price is down here, right? Open, close. Technically, by the language of the law, even if this is a bullish candle, this is still considered an EBP because we took out the prior bar low and we closed above the open. So the closure, because the close is above the opening price, and we took out the prior bar low, it's considered an EBP. Well, Forex platforms are the best to use. I talk about it all the time. If you're in the US, I prefer Funding Pips, man. Funding Pips process is very smooth. Haven't had any issues when it comes to payouts. And then after that, we'll go with like Alpha Capital. Arib, I struggle with finding continuations. Let me see. Let me go back to indices for the market open. But yeah, but honestly, if this fades off at market open, then I'm pretty much going to be out of the position entirely. And then, yeah, just kind of go on about the day. Arif says, I struggle with finding continuation entries from higher time frame key levels. Would you mind looking at NZD, JPY, assuming a bearish daily bias from order block? What would be reasonable entries? Let me just first pull it up. Okay. Now I'll try to answer this question before the market open. Okay, so would you mind looking at NJ, assuming a bearish daily bias from the order block, right? Let's just assume he's talking about this order block, I'm assuming. Where would be a reasonable entry and stop loss placement for a second leg entry? So like if this is your daily bias, right? Maybe you look at this order block and you're like, you know what, I want to trade the market if it rallies up into this order block. Number one, what I do is I go on the 4-hour time frame. So if I go on the 4-hour time frame, what do I first see? Let me just turn on the days. Okay, let me just mark out this fair value gap and then we'll go down to the time frames lower so you can see the days of the week, right? So this was Monday, Tuesday. Let me see which day did this form. Okay, so the order block formed on Wednesday because we had this down close candle. Perfect, right? So number one, I go down to the 4-hour time frame and I identify inside of that order block, is there any fair value gaps? There is one all the way up here.
Now, what you want to do, or what I typically would do, let me just remove this so it's not too busy. We know where there's a fair value gap, and we know that there's an order block, and we know that this is the next low in structure, right? Swing high, swing low, and we go to the daily time frame. If you're looking for the candle open, rally, and then push to new lows, that's this low right here on Tuesday's low, right? That's Tuesday's low. Let me just confirm. Beautiful, Tuesday's low. If I see this right here, right, EBP, now what you can do is you can go down to the 1 hour time frame. Look, okay, if there's is there any fair value gap? No. 30-minute time frame, is there any imbalance? No. 15 minute, is there any imbalance? Very like if you don't see anything clear like that, then all you could do is just again, same thing, just draw the fib or put on the indicator, right? Look for close and an entry. Maybe you enter right here. And for this, when I have something like this, I usually put the stop loss above the opening, like a little bit above. And then you could just kind of trade like this, right? Beautiful. You get the point. So again, inside of like the overall daily bias, look at the impulse swing on the 4 hour. This is swing high down to swing low. Inside of this overall swing, is there a fair value gap that you can identify? Boom. Now all you do is wait and to see, hey, we're gonna go up here, and do we have a confirmation? Right? Now, what do I see on the retracement up? A bullish EBP. So I would not want to sell this when the market is retracing back up in here until I see something clear. And then we get something clear here. The market comes up. We go. That's why I say a few pips above like the opening price, like sometimes around here. Honestly, and I might even get this coded into the new indicator. What you can do is you can just put a stop loss around the 0.85. Whoops, my bad, wrong one. 0.85. Let's just do 0.80, 80% of the range, right? Nah, let me do 80, I usually do 0.85. Let me see. You could do it up to 90%, 0.9 if you want, to give a little bit of room for the market to run up. Because sometimes we'll have a deeper retracement, but usually if it gets to the 85 or like 90, it's pretty much kind of like over at that point, very likely. So again, this could be the full model. Even if you enter here, it doesn't matter, right? You have to identify where's your objective. Because if you took something here and you didn't go to the lower time frame because you didn't find anything, right? This down to the low is still 2.5 R, and you never have to go below the time frame. Now, if you want a higher risk to reward, you could always wait for the 50% because you realize, like, you know what, this has potential. I'm going to wait for a bigger pullback because I want a better risk to reward. This went 30.5 R to the low, all the way down to the exact full range is 5 R. And this is how you get like really good entries without having to even like go down to lower time frame if you don't want. But this is like my idea when it comes to top-down analysis, from higher time frame down to lower time frame. Yeah, anytime, Reed. So the kind of retracement GJ doing on daily right now, how do you position your bias? Is it just retracement to continue higher, or you switch to bigger short? So this is the thing about like this is what you guys need to really realize about bias. If I'm looking for something, all right, like I remember at the beginning of the week I was saying I was gonna wait to see if I wanted to see any potential bullishness on GJ, right? I did say that dollar yen though looks pretty bearish and we might run these lows. So if I have a situation like, okay, I go into the week bullish, do I see anything to confirm any bullish price action? No. Every single trading day was high, low, then the next day, high, low. I'm seeing bearish structure on daily candles. Now this is a really good question. If I don't see anything, do I flip bearish? No. I just look for something else on a different pair. Sometimes I'll flip bias if I see something like, but I try not to do that for the most part because if I'm bullish on something, I don't want to like, yeah, it's just a psychological thing. You could though, by the way, but it's just not like a bad thing to do. It's just, yeah, it's not a bad thing to do. I just don't like to do it. If I don't see anything clear in my bias, I'm typically going to just, yeah, stay away from it. Muhammad says, yeah, so FTMO, if you're not from the US, you could, yeah, FTMO is also a really good option. They're a little bit more expensive and it's 10% profit target, but yeah, but they're still pretty solid. Alex, you still use Think Capital? No. I only had one account with them. Lost that account because they actually have I think it's a 3% rule. So like if you lose 3% on any given trade, that's a breach. And also they have a news event as well.
You can't trade during news at all. It's a hard breach, not a soft breach. Like funding pips, if you trade during the news, let's say you take profit in the news, they won't count the win. They won't count that one trade, but you still can get the payout. So Think Capital lost my account with that. And then yeah. David, how do I train my eyes to see a higher time frame trade like you, bro? I'm trying hard to become a profitable trader. I'll be honest, man, like it's really just experience and it comes with a lot of I think the problem with daily bias or like higher time frame analysis for most people is they try to analyze every single chart. That's number one. That's the biggest I think that's the biggest downfall for most traders. They try to analyze every single chart. Now, the big issue with that is when you try to analyze every single chart, it's very difficult. Like again, that's why when some people ask me like, "Hey, what's my opinion?" Sometimes I don't have an opinion because I don't know, you know. But I will say this: if you want to trade like with a higher time frame analysis, just always tell yourself like, "Hey, the number one question I always ask myself is, okay, let me go back to this. The number one question I ask myself when it comes to higher time frame bias, right? Where are we? So are we at premium or discount? Is there any run on stops at that level? Is there an opposing level? So let's just use an example if I'm bearish, right? If so let's say you're bearish, right? If price is at a premium level and then you see a run on stops, like a stop hunt for our EBP, then downside, is there a downside fair value gap slash sell stops? If you answer this question and vice versa for buys, I guarantee you'll have much better opportunities in terms of finding buys. Because the thing is this, I know a lot of people say, oh, I want an intraday model. Listen, man, the problem with intraday models, in my personal opinion, is sometimes you'll be going against the higher time frame order flow. Now, sometimes there is no higher time frame order flow, right? Not every single day is going to have a bias. And then that's when people who scalp on the lower time frames, they do well on those specific days. So yeah, man. So like it's answer these questions, I guarantee you'll improve. Someone said gold is pushing. Uh yeah, starting to like respect this that fair value gap on the 5 minute. Market open is in about 3 minutes. Again, if this fades off, I'm pretty much gonna be out all the remaining position. I mean the reality is could this be like a potential like really big play where maybe we had like this is actually the top of the marketplace and then we had a little bit lower, possibly. I mean maybe had a little bit deeper. Like maybe this 15-minute area right here. Possibly, but I'm just trying to teach you guys like I don't like if it goes all the way down here, I don't really care. Because my objective is just these lows. And then yeah. I mean you could theoretically just trail stop loss, but we'll see. The market open is in about 2 minutes now. Top four prop firms you would recommend for trading. So if you're not from the US, FTMO, Funding Pips, Alpha Capital, I think are really those three are pretty solid. Think Capital's again also I like them, but they don't have I don't know if they have MT5 or not. But Funding Pips, FTMO and Alpha, I know they have MT5. So if you're not from the US, those are the ones. Now, if you are from the US, Funding Pips, Alpha Capital, and then Think Capital would be the top three. Top four, yeah, I don't know which firms are out there. Really, I just use those ones. I used to use FTMO back in the day. They don't allow US clients anymore. So that kind of sucked, but yeah. Shaquille, do you use an indicator? Yeah, you could. There's so many different indicators, man. You can just like look them up. Previous day highs and lows. Yeah, they have. There's so many different ones that you can just use. Even you could use try nephew Sam's indicator as well. He's in the group as well. You could do that. Yeah. So good point, Alex. So Alex brings up like you can go to like prop firms, propfirmmatch.com, and then you can look up all different prop firms. I was actually thinking about doing something similar to prop firm match, but like because everyone now has like these different prop firm review sites. So if I ever do one, I'll definitely let you guys know, but it would have to be a little bit it'd have to be something kind of like a side project. I think most people should max their watches with major USD pairs only, maybe IGJ. I agree, Fat. So it's it's something I always talk about. You don't want to populate too much. Again, you don't. It doesn't even have to be the majors. You could watch Euro AUD, GBP AUD. You could watch cross currencies if those are your main things, and pretty much be good on that, to be honest. Okay, so market open. We'll see how we trade. Yeah, not much volatility to open up the NQ. Let's go to NQ. Where's NQ? On the 15-minute. Yeah, this is a minor one right here. After clearing sell side liquidity, and then you could just trade these. See, like that's what I mean. Like you could trade these moves back up into the range. These little bit of a scalp moves. I'm interested to see. Yeah. NQ has taken PDL again. So again, the bias is still like for me overall, based off the daily, is still pretty bearish. Because I can argue that NQ also didn't take out priority highs. ES took out priority highs. Um, the thing is, I'm not gonna lie, NQ and ES have not really been moving in sync. Like this has been just down, down. ES is kind of like just catching up a little bit. Uh, mm, 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 mm. All right. So yeah, guys, you already know the what I'm looking for. And yeah, I think I'm gonna call it on that. It's 9:30 here. I'm gonna kind of just I'm gonna monitor this. I'm not gonna take any more trades, that's for sure. It's just in terms of taking profit, I just have a position running for this, and then we'll see how we ultimately trade. The recording will be up probably in a little bit. All the recordings should be up. I'm pretty much, I think I caught up with a lot of with all the homework assignments. I'm gonna go through them one more time just to make sure I didn't miss any of them. And yeah, I do believe I think there's a session today. Let me see on the Discord inside the weekly calendar. Um, where is Yeah, so there's actually a session today at 4 p.m. Indicator backtest slash journaling session. So I'll see you guys at 4 p. Some of you guys at 4 p.m. EST. Again, these are all recorded. So depending on your time zone, if you can't make it, no worries. You can watch the recording. But yeah, guys, I'll see some of you guys at 4 p.m. And yeah, guys, hope you guys all have a great trading day.